threshold or a maximum amount?
It is a maximum amount. It could be less.
Okay.
It just cannot be over 35. Okay, so how is SBA defining what a viable business is? It is a for-profit business that has evidence of profitability within at least one of the past 2 years. You must be a going concern, meaning that there's not a threat of you going out of business. You're having difficulty making your periodic payments of principal and/or interest on a qualifying small business loan and/or meeting your operating expenses. You must be able to project continued operations beyond 6-month period after the payment assistance has been applied to your business. Okay, what is an ARC loan not for? It's not for a startup, change of ownership, you want to expand your business, or if you've had a previous loss to the government. And these here, that is previous loss to the government. That goes with all of our loan programs. Oh, I went too far there.
When you say that it's not for startups, that's kind of self-explanatory, but what is the minimum amount of time one has to be in business?
2 years.
2.
Mm-hmm.
Okay.
I think if you click the down arrow, you're going to go back.
Am I going to go back? That's okay. It went forward, but that's okay. The other, oh, go up. What it was the slide that we skipped over was for businesses who are not eligible, such as casinos, any type of a gambling facility, swimming pools, like golf courses. I think there may be one other one in there, but those are all.
What did you
those are across the board.
there?
I have mental telepathy, I think, here. So maybe if I just start thinking. Go.
This is Wi-Fi to its limit.
Yes. Really? But those ineligible businesses, those are across the board. That's just SBA's policies. Okay, yeah, this was one I didn't touch, right? I think, right? Yes. How are we defining? Okay, how are we defining a immediate financial hardship? So these examples are some of the examples of an immediate financial hardship. Your sales have been declining, the lender has frozen your credit line, difficulty meeting payroll, difficulty making loan payments, and you're having a difficulty purchasing inventory, materials, or supplies.
Shannon, I'm assuming this lasts until the money lasts and then it's gone.
This lasts until the money runs out, or it is October 2010, whichever comes first. Right. Okay, so I mentioned that they cannot exceed $35,000. The loan is made by all of our participating 7A lenders. It holds the 100% guarantee. The SBA did not set this program up for direct lending, therefore it would be with our participating lenders. And the only direct lending that SBA has is our disaster loan program. Okay, use of the proceeds is restricted for your monthly debt payments and also your payments on your lines of credit. Okay. There is no interest charged to the borrower, so when they go to have that repayment, it's amortized. It's just they're paying back the flat $35,000 or whatever their loan was made for. The SBA is going to be paying the lender the interest rate, which is 3.25 prime plus 2% adjusted monthly for the life of the loan. Okay, the disbursement period, once the loan is approved, it's going to be dispersed, which is going to be determined between you and your lender, but over the maximum period is 6 months. So then at the end of that 6-month period, you will have a 12-month period of no payments, and then your loan will need to be repaid over 5 years. So it's my understanding that they're just going to amortize that out, so it comes up to be a little bit around $600 per month. And I believe that you can pay that back. I have not heard, you could pay that back earlier if you wanted. However, if you could pay it back at $600 a month, then unless somebody had some extra money, I guess, and they wanted to pay it back, which SBA would
So
definitely appreciate that too.
the bank submits the paperwork to SBA, and SBA has the final decision as to whether to approve it.
Well, the lender is going to be determining eligibility, and then and there's going to be all submitted through the E-Tran system, which is, I know a little bit about it, I'm not that familiar with it, I've never used it, but it is, I believe, a universal system where the lenders can input the information, which makes it a much quicker process. So they're going to be submitting the information, SBA is going to be approving it, and I have heard, I would like to say 10 days, but depending on when the lender submits it, I would say 2 weeks is probably a good time period. And now with this loan too, there's also a little bit, the credit criteria is a little bit less than what would normally be. I don't know, I don't have a credit score number, but they're supposed to be looking at the business and the personal. So a blended score with that, and it's a little bit less than what a typical SBA or conventional loan would be. To make up for, now everybody's credit scores are hurting. If you're in a distressed situation, you're obviously not being able to make everything on time. So I think that the agency heard that from small business owners, so they tried to incorporate that into this particular loan program, just the ARC loan. Okay, so here are some examples of small business loans which can be repaid. Secured or unsecured conventional loan, credit card debt, and with the credit card debt, you will need to produce evidence to show that it is a credit card debt. So, I have, if you have a Home Depot or you have a Lowe's that you use for your business, or you just have a Visa, you'll just have to make sure, and I do tell people this, go back, get your statements together. If there's something on there that maybe is a little bit questionable, if you use it as a business expense, just list it and make sure it's clear of what it is. So, okay, so we can pay capital leases, we can pay notes. So if you have a vendor that your accounts payable is continuous, you could have them convert certain invoices or however into a note which you could use to pay this proceeds of this loan for.
Let me ask you this. Let's say you're a banker.
Okay.
And you have some clients that are having some difficulty with cash flow. What prevents you from contacting that client and saying, well, we've got this new program that's a big benefit to you, because that no interest thing and those spread of 60 months is phenomenal.
Right.
But does the banker not think that way because they can make more money off of their internal commercial loans than they can off of this? Because see, we're in the business to help clients, and we want to do more of it with ARC. And I can't believe that the wheels aren't rolling faster than what they have been.
Well, I'm not a banker, but however, I would think I'm going to kind of answer that. I think maybe it's more either they don't have the staff. Maybe it's if you have certain banks who are more customer service driven. Now, if I was a banker and I had I'm assuming it's I don't know if they call it their portfolio or whatever, and I do work with some people every week, and they do have a line of credit, and maybe it is maxed out or they're trying to repay, and you have a good working relationship with them. So some of that too may go back to the customer. If they're not having a very good working relationship and they're saying, I've got X number of dollars for payroll, this is the business client talking, saying this and this, we're just getting through till next week. If we're looking for something, if anything would come up, let me know, and then the banker would say, hey, here's this program, I've got ABC Incorporated over here, I know what they're looking for, I know what they do, this could be a good loan program for them. So